In this video, we're going to talk about a full 1-minute trading strategy and money management. The advantage of this trading strategy is that you don't pay any money for any trading platform, and we can apply it also with real money. And the second one, it is very easy to learn. So this video should be everything you need. And if you really like this video, then please subscribe to this channel and join up the Discord server. What you find under this video, the link in the description, you can do there some exercises also based on this trading strategy. So first of all, you can see here how a student of mine was trading. It's his first year. He has no prior experience and he made $3,313 within this month. What is very important to understand is that it all starts with having more trading signals. More trading signals means if you invest 20-30 hours of your time within a month, maybe you're just trading 2 or 3 times a week or 5 times a week for 1 or 2 hours each time, this is totally enough. It is very important to understand how many trades were I able to see. Well, because I'm from Germany, our trading time is around 4 p.m. to 10 p.m. We select there somewhere 1 or 2 hours. If you're from America, it's going to be Central Time, 9 a.m. to 4 p.m. Somewhere around there, 1 or 2 hours, and that's totally fine. You can see here totally, and this is something what's very important with money management, because in trading, we feel like you may have traded already using a demo account, or you don't even know what a demo account is. A demo account is an account where you don't pay any money for, and you trade with not real money. And very often is that people start trading inside there without having a proper trading strategy. Just have 3 losing trades. I mean, like they just traded 3 times wrong and the market was going in another direction and the account is already broken. So what the trading strategy has, the advantage is that we adjust $100, we're aiming for $500 on average. What you can see here that we have here 5 losing trades of $402. We have 10 winning trades of $3,716. In total, we made $3,313, what is called profit. Profit is what it means, what we get out for money. We were also analyzing to over $12,000 or something, what is very important based on our trading strategy. We want to see many working trades and select only the best. And very often using trading strategies, a very big problem is that we may see only 5 trades or 10 good trades a month, and this is totally not good. We should be able to see 20, 30, 40 trades in quantity. And then from there on, because we have now so much quantity of good trades, then we go within quality. So how to do this now? This is what we're going over. By the way, with money management, I must also say that sometimes there will be a week that you have total losing of $100, $100. This is totally fine. If you simulate a $3,000 account, for example, $100 a trade, can be absolutely normal. But it's just very important to understand that there is always the second, third, the fourth week where the market will change, because it's very normal that you will have weeks and days where the trading strategy is not going to perform that well, and you will have weeks and days where it's going to perform very, very well, way more better. Okay, let's get into the trading strategy inside. You can find your trading view. Make sure you download the trading view. If you go on the top left as on my profile, on your profile picture after you signed in, it says download desktop app. Use a 1-minute chart and then go here to the S&P 500, the ES1 exclamation mark. By the way, we have here a Discord server, and on the Discord server, this is what you learn based on the trading strategy. You can do the exercises, how to spot first, in what direction the market is going at, what we're going to talk about. And after you're able to spot in what direction the market is going at, then we're going into now, if I can see that this can be with my $3,000, $5,000 account, each time a $500 move, or maybe a $1,000, $2,000, $3,000 move, then how can I get now the trades out? So here, for example, you see I'm drawing here an arrow up. This is from a trading student. And then you can see here how the market was also going up. And this is the first thing you need to learn, in what direction the market is going. Here again, the trader assumes the market is going up. And then you see here how the market is going up. This doesn't need to apply to every day, just some days, because in trading, it's all about money management. Because when we adjust $100 using a demo account first, that is not real money account first, please. It's all about like, okay, today I lost 2 times $100, but tomorrow I'm making $400, $500, $600, $700, or $800 within just one single trade. And then I can afford 4, 5, 6, 7, 8 more losing trades in a row, because trading is money management. It's not about too much learning with the candles. It's more about you have the chart on the right side, you make it small. Don't make it too big, too long, just make it small. Also don't make it too small like this, that it's just in one line. Just use your whole chart, what is very important. Understand, if you go here to indicators, there's something that is called FX market sessions. Very cool. Put it to your time zone. I really love to put this one here to -5 Chicago time. And then you have here starting 9 a.m., 10 a.m. right now until 4 p.m. This is what your trading time is. It's pretty cool. And then here we just select somewhere 1 or 2 hours trading. If you start trading, of course, you cannot see the future. And that's why I have an exercise for you doing 3 simple things. Actually, it's just one simple thing. If you just sit down here, make sure you take a square from where on you start at. For example, here it's 0:30 a.m. We put this one until 1 a.m. for example, if I want to trade here 1 hour. Until just like the time. And if I'm saying like I'm trading until here, there's also a tool on the left side. It's called the path tool. This is something that's very important because you need to build a relationship to the market. I need to find the path tool here on the left side, and then I can tell you like what's going on, like what we can do here with the exercises. If the path tool is letting it find itself. Okay guys, I have a problem you finding the path tool. There we go, path tool. You can see it here where the brush is with the path tool. And then from here on we draw, and do we expect right now the market is going up or does it go down? And it's very important also to aim at a specific reference. Can I see, and this is something that's very important, making the chart small here, seeing here the structure, there's something that is called here the horizontal ray. I really love this tool because you place it here on the bigger structure high, we place it on the bigger structure low. Now it's time that you learn how to anticipate. If I can see the last 1 or 2 hours, the market was doing this move from here to there. If I'm assuming the market will do the next 1 or 2 hours the same move, it makes sense to me that the market is going here to this structure high. If the market does this move down, what you see from here to there, it would need to produce it 2, 3, 4 times that the market goes down here. So I believe in more like if I would trade now for 1 or 2 hours, that it would make more sense that the market goes up here. Very important, right now this is not on the US session time. This should happen on the named US session time, what I just named you. And then we draw in an arrow starting here, up here. We make a picture, we make the chart small as you see here, not big like this. We make the chart small so we almost cannot see candles. Also on the right side, not like this. Also not like this. We want to have it like that, right? You make a picture of the chart like this because so we can see structure. And then if that's confirmed, as you see also in the picture, what I was just showing you, as you see here, for example, picture 1, after watching the market for 1 or 2 hours, the market really did the move. This is where we start with building a relationship. If that's the case, by the way, you can start totally free. Just go down under this video. You can join up Discord. You can start there. Pretty cool. I set something up there with Discord that you can just post the pictures there. You also get their feedback. You can find another trader there. I think like it's just like nicer also not just to be alone, also to have a small community. The thing is, after you realize in what direction the market is going at, it's all about then, now where can I find good trades to adjust $100 to get $500 out? And the reason why we do futures trading is because this is $250,000 worth, sometimes $240,000, sometimes $270,000. And we can start that using only a $350 account or a $2,000, $3,000, $5,000 account. That means if someone has $20,000 and he can make money with that, he can leverage extremely strong, especially if he's skilled. I think like it is the best way because it's about using small money with high leverage. So for example, if we can see that the market is going up here to this reference, to this high here, for example, and we would start trading here because it's like 9 a.m., 11 a.m. or something, right? If we just start trading here, for example, and we see the market would pop up here because it does a lot of green candles. What I really love is that the market, once we understand in what direction the market goes, if the market does a red and a green candle, there's a tool that is called the long position, the short position. When taking a very long green candle as here and aiming now for our target, you can see here there's a risk reward ratio of 6. That means if I adjust $100 on the green candle, I can get $600 out. If there's a too long green candle as you see here, my risk reward is just decreasing a lot. You can see here now it's only 4.5. Sometimes there are these very huge candles and the candle is so huge that when adjusting that and maybe aiming here just like for a smaller structure high it's called, then my risk reward is just 1.87. That means if I adjust $100 I just get $187 out, and that's too less. But in the same area somewhere there is this small red and green candle as you see, for example here, red and green, that when I adjust here $100 I can get here $700 out within smaller movement. because I have the leverage trading futures. Very important. Futures trading gives us the leverage. And that's why, like, that's the main reason why small color switches like red and green for trading up, or green and red makes more sense for me to trade up. And it's literally about, you first want to do this on a dead chart. That means like you want to see it while the market is doing that. And then afterwards you want to search here, where can I see everywhere red and green? That when adjusting the stop placement and the red candle or the green candle on the lowest point or on the higher point of it, as you see here, you can see here risk reward ratio of 8. So this might have been a losing trade of $100. This one also of $100. But if one of these is working out, check this one out, there's a smaller green candle here. If one of these is working out to gain $500, we would have made $300. And you see afterwards the market did it also here, right? So we see here red and green, we see here red and green, and we all want to see this first on a chart that is literally that is not moving that much. What can be a very beneficial help is either we aim always for the biggest structure highs, medium structure highs, and what I really love is also to measure how long were the length within 10-20 minutes. The market did it for the first time, the second time, right? If it does it the third time, it does this length, what make this trade very good. If you look the length in how much the market made moves down, you see from here to there, from here to there, the market would need to produce this length. I'm going to select here another color so you can see this one better, violet, and then we make it less transparency. This move here, what you see is what the market does. The market would produce it here 1 time, 2 times, like 2 times until the market goes here down. Check this out. So 1 time here, and then from there on again the same 2 times. But when the market does here 1 time, just like this, move up, the market needs to do this only 1 time up, that the market goes here. If the market would do within the same time, just another move up, like that's the double of move. That's double times of candles. That's like way more red and green color switches that are small, where to see you to adjust $100 to get $500 out. Because in trading, we have always quantity of trades and quality of trades. And before we start up measuring the things, what I'm doing here right now with quality, we need to go in with quantity. Before we can see quantity, we need to make sure first we see the right direction. And this is where to start, to build a relationship with the market. I hope you could take something out of this video. Wish you all love good trades. JT out.